Alright, hello and welcome to Camel Finance. I'm your boy Camel, and today it's going to be quite a short one. I don't have a great deal to say. I mostly want to focus on what's coming up in the charts for the week ahead, because I think it's time to actually start paying attention. We need to be checking out what cycle lows are going to be doing in the equities. Bitcoin looks like it's starting to get going, so I want to talk about that. But ultimately, what I'm going to be focused on for the coming week is looking to see where these cycle lows go, and then most importantly, can I use those cycle lows to tell me whether or not we're going into melt-up mode, or whether what we've just experienced in the stock market was indeed just a bear market rally that's about to resolve lower. So that's where my focus is. That's what I want to share with you today. Let's get into it. I wanted to start by pointing at this and just saying, look how crazy the world is. Over in China, it's snowing, but people still have to line up in the snow for their daily test to keep their QR code green and ensure that they don't suffer the repercussions of having a social credit score that drops. So look how crazy this is. The IRS has warned Americans that they must report payments over $600 on Venmo, PayPal, and Cash App. So here is a meme that summarizes it perfectly. Insider trading by members of Congress, and the government is of course blind to this. SBF getting away with billions in an FTX Ponzi scheme. Of course, they're blind to that as well. But your $600 Venmo transaction, they are keeping a very close eye on for some reason. Bitcoin is on the verge of a massive momentum shift. You can see here the 3-day chart. We have lower lows in the price with a higher low in the oscillator. This is bearish divergence and is indicative of trend exhaustion. We also have a bullish cross trying to form on the MACD. This is incredibly bullish looking if we can continue to press up just a few more $100 over the coming days. I'll show you that when we get into the charts. Here's a Bitcoin Wyckoff schematic. I've been looking at and showing Wyckoff schematics on this channel for a while, and I will continue to do that until we validate or invalidate the Wyckoff schematic. But this is really important to show. Okay, 1, 2, 3 with the top, 1 on the way down, then we form the bottom and we form a spring and go. And that's exactly what the Bitcoin price has done. 1, 2, 3 at the top, 1 on the way down, then one last one with a spring, which I've been showing for a while. So we'll get to the charts in just a minute. But Bitcoin is only about $600 away from confirming its Wyckoff spring. So things could be very bullish very quickly, in my opinion. Whether we confirm this spring or not, it's likely that we're either going to confirm this and go, or we will trade around sideways into the start of January around the 6th and then go. So either way, we are incredibly close. You know that narrative that exists out there that says Bitcoin is only used by criminals to launder money and to, do criminal stuff? Well, less than 1% of Bitcoin usage is actually associated with crime. So it's actually the US dollar that is used by criminals the most. Bitcoin, to tell you the truth, is just simply not a very good instrument for illegal activity. The barrier to entry for coin mixing and hiding the coins is just far too high for most criminals. It's much easier to just use cash. You know that trend line in the S&P 500, which only has psychological value amongst analysts? Well, the Russell 2K is breaking higher in an insanely bullish setup and structure. Stay bearish all you like, and I've been warning against this. Here's the Russell 2K. Look, it's broken out, and it's going to start its move up. The bears do not want to hear this, okay? This market is truly vile, they say. What they did this week was criminal, pure manipulation. Well, welcome to the real world, kid. This is how markets work, okay? All markets are manipulated. You can see here, look, small speculators continue to go bananas on betting the market is failing. Everyone thinks this is a bear market rally that cannot resolve to the upside. They think this has to resolve to the downside. And you can see that here in these small spec positions. The problem with shorting this current rally, in my opinion, is that if this is indeed a melt up, shorts are going to end up homeless. Okay? Sellers in this sector are extremely exhausted. Next, likely comes the buying pressure. Look, you can see here, absolutely record levels, okay? There's no one left to sell here. All the shorts are already all in. They're already getting margin called. All there is now is fuel for upside rallies. And I've said this all along, and I'll say it again. This rally, if it is to unfold, will be the most hated, the most doubted, the most shorted, the angriest rally, the least understood rally of all time. It doesn't make sense. Okay, it doesn't. I agree it doesn't make sense, but that doesn't mean it's not going to happen. Central banks added a net 31 tons of gold to international reserves in October. Do you think they know something? I think they do. I think they know that if they don't start to buy this soon, then they're going to have to be forced to print next year. And when they print next year, the prices of all these currencies are going to zero. The fiat currencies are going to collapse because the amount of money needed is exponentially increased versus the prior times of printing. Every time they print, they need exponentially more money. And if you think inflation was bad at the peak 6 months ago, you wait until you see the inflation in 2024 and beyond. So here's my focus for the upcoming week. Okay, the dollar continues to make its way down. Now, is some level of bounce or reaction sometime soon likely? I would have thought so. I mean, it would be unusual to just see it do this, right? I would have thought we're going to get some level of like bounce, and then we can come down and test this line here. That, of course, remains to be seen. For now, I think it's quite clearly topped. You can see the yields as well. Again, the chart of truth, the 10-year yield, continues to bleed down, doesn't it? Continues to do what we thought it would do. This does not speak to risk off, in my opinion. The 2-year yield, I've been talking about this head and shoulders formation, looks to me like it is broken and now heading down, okay? Doesn't mean it couldn't wick back up, but it hasn't done that yet. Taking a quick look at Geo, it looks to me like Geo is thinking about putting in one of these boxes. So I said about this, instead we would expect to see a box form, a base form, and then we can look to add a position. If it can do something like this and then break out, we'll add here, put the stop loss here, and move this stop all the way up here. So then we'll end up with double the exposure, some profit locked in, and ready for the next leg up. That, of course, remains to be seen. For now, I need to be a little bit more patient, but Geo doing exactly what I wanted to see it do. Here's Bitcoin, still working on this Wyckoff spring, in my opinion. We're getting closer, aren't we? It's working its way up. If I hop into this other Bitcoin chart here, then you can see that we are now currently only around $600 again from recovering this low from back here. This to me would validate the Wyckoff spring. Confirmation would come at about 18.2. That is where I'd be looking to get long with a stop loss below this low. And that is where I'd be pretty confident, if we could see this happen, that we have indeed seen the bear market low. Another scenario that could unfold from here, and we have to be mindful of, is that if this is going to continue to chop around, we could see us drop into a 60-day cycle low around the 6th of January, 6th to the 8th, and then it could come out of here. And if that were to happen, in which case this position would be moved to something like this, okay, out of the swing low on the day 60 from here. So if I click here, you can see that there, that is 60 days. So that is where I'd be looking to buy the swing and cycle low if we cannot recover this spring. So those are the two scenarios I'm looking at. We're either about to validate this spring and go, in which case we're still expecting a cycle low here, but it would look something like this. We would work our way up, drop into that cycle low, and then go, and we would have been long from around here. Or if that doesn't happen, like I said, then we can trade sideways or potentially sideways and down into this cycle low and then go. Either way, the bull market is less than 40 days away. I'm convinced of that. Still pushing my Zcash trade, so not really much to say about that. Bitcoin really needs to recover its spring, as I keep saying over and over and over again. The same is true of MATIC. XRP is still below its red line, so still playing patient there. Not interested in Ethereum until Bitcoin can get going, but the signs are there for Bitcoin, as I've said, and I think we're going to start to make some progress with Bitcoin over the coming couple of weeks. I'm still pushing a silver long. As you can see, silver long is going well, so can we get back up into this nice purple range here, this range up here? That would be quite a good trade, wouldn't it? So hopefully that's where we can go. That remains to be seen. For now, you can see as well with gold continue to push this trade, so quite possible that this is the count, although I'm still not 100% sure. I will update you as soon as I figure this out, but for now need to see whether we drop down into a cycle low over the next couple of sessions. If we do not, then we will move this count like this, and that would actually make sense given where silver's count has lined up. So anyway, a couple more days and then we'll know for sure about the cycle count there. Same old from all of these four: Coinbase, MicroStrategy, Riot and Marathon. Not much to say there. Still waiting for Bitcoin to recover its spring, as I keep saying over and over and over again. I noticed Tesla breaking out. I'm not really one for taking new positions on a Friday, but potentially this could be a long here, something like that. So this is something I'm lining up, I'm having a look at. We'll see what happens on Monday. And Apple's still kind of doing a whole lot of nothing. So, but I would think if we can break out above that, then this would become the start of an uptrend for Apple. So if you're not in already, that's a trade idea for you. UKX, look at the UKX go. Look, continues to just fly, doesn't it? Continues to press up towards the 52-week highs. So again, not really the sort of thing I would expect to see from a bear market rally, personally. VIX, look at the VIX go, continues to get pushed down. So all the while we're underneath this red line, there's obviously no longs, but we start to break out and close a daily candle above that red line, and it's important to get long because there's always the chance that this fractal here from 2008 could play out. Now it looks to me like it could break away from here, but at the same time, we have to respect the fact that it also might not break away and that this may well be on the table. Of course, if this happens, then the melt-up thesis is completely cancelled. we will not be going to new highs for equities and crypto. I shudder to think what will happen to crypto if this was to unfold. So at the moment, though, doesn't really look like that. Would I expect to see perhaps a drop down to 16-ish, then a breakout that kind of comes up here and then rolls over? That would be fine. That would be in line with expectations for what I expect the stock market cycles to do. So the Dow Jones, kind of expecting this to just, keep meandering up. That's what I expect to see with that. I expect to see tech start to stage a catch-up rally. I want to see this gain a couple thousand points pretty pronto. But all of this ultimately comes down to the S&P. This question still remains of, is this count right? In which case, well, we can expect the price to do something like this, drop down into that cycle low around the 6th of January, and then go from there. That's scenario 1. Scenario 2 for me is, what if we have to move the count to here? What if that was the actual freak early cycle low? Then this will come back something like this, and then we'll find out about that because we'll get a drop down into this cycle low right in time for the CPI print on the 13th of December. Then I think we can go. Now, of course, I've said this before, but I'll say it again. Wherever this cycle low forms, whether it is down here and then go, or whether we go up first and then down and then go, whatever happens, it's important that where this cycle low forms, and when I move the arrow to it, I'll make sure I do this live on the channel, we need to hold that low. If we come up and then take out that low, that is the trigger to tell me the melt up is cancelled. This was just a bear market rally, and we will have to get short and certainly exit all long positions, expecting much lower numbers. I'd also be expecting that VIX fractal to explode to the upside. So if you're a stock market bear, if you think this was just a bear market rally that's going to resolve lower, this is what you need to see. If we form this cycle low and go, then you have to, in my opinion, be willing to flip to being a bull, because there is no bearish case until we form a cycle low and then fail, which means breaking down, taking out that low wherever it forms. So it could form around the 13th of December, the 12th to the 13th, and it could also come as late as the 4th to the 6th of January. We'll find out soon enough, won't we? Because like I say, if we keep trading up here and then we drop down, we'll know that this count needs moving. But if it doesn't occur until the 6th-ish, then we'll know that my count here, as I have it, is correct. So that's the analysis. That's what I'm looking at this week. If you found value here today, I'd appreciate it. Could drop a like on the video. Subscribe if you're not already. Turn those notifications on if you want to see how I continue to deal with these markets in real time as a pro swing trader. In the meantime, enjoy the rest of your Sunday. All the best from me. Take care. Cheers. Bye.